So, hello everybody. Hello, bonjour, guten Tag to everyone. Thank you very much for joining us in this webinar presented to you by the European Champions Alliance and the CEFA, the Club Économique Franco-Allemand. My name is Andrea Vaughan. I'm one of the co-founders of the European Champions Alliance and will host this webinar today for you. A few words on the European Champions Alliance. So we are a non-for-profit association created in February 2020, and we are building an ecosystem of startups, scale-ups, SMEs, corporates, and industry experts that are all committed to European tech and values. We leverage our network by our European network by sharing market knowledge with our members and the ecosystem, and by activating joint business opportunities between our members on the one side and our ecosystem, with the goal to support the growth of European technology champions. So we have a lot of activities all year long. We organize a lot of events like this webinar, for example, but we also have some in-person events where we attend either as the European Champions Alliance or with our members, and also publish industry-specific information like buyer's guides, scale-up mappings, articles, interviews, everything that you can find on our website, our blog, our LinkedIn, our YouTube, and all of the channels that we use. We have over 60 European members already in our network, and many partners also that are part of our ecosystem. We also organize with our members a lot of internal meetings, networking opportunities, working sessions, on various European topics and projects. And if you want, you can, of course, become a member and be part of our meetings. You can find all of the information on this on our website, europeanchampions.org. Or if you have any questions, you can contact either myself or Bjarne, who is also in this webinar today, or just leave a question in the chat. Also, a few words on our partner today. So we are organizing this webinar in collaboration with the CEFA, the Club Économique Franco-Allemand. It's the second webinar that we organized together. The other one was in 2020 on a space tech issue. Maybe you have also already attended this first webinar. So the CEFA is the Club Économique Franco-Allemand. It has been founded in 2005 with the main objective to contribute to the strengthening of economic ties between the two countries, France and Germany, through personal contacts. The CEFA welcomes mainly companies and company managers, mainly from the industry. For example, Airbus, Allianz, Bosch, Arianespace, Bayer, Commerzbank, and many others. You can have a look on their website on the list of members. But now let's head over to our topic of tonight, and also to our speakers that have joined us today. So the idea was to have a webinar on an investment topic, and especially for seed stage and early stage startups, funding mostly comes from investors of the home market, as proximity, cultural understanding, and network are quite crucial in the early days. So depending on the startup's project and the industry, it should be wisely considered to invite investors from also foreign target markets to the table, even in a very early stage. Because not only will the investors have a positive impact on the growth strategy and the development of the company, but they also help open up the vision to international markets very early on. So this is a huge added value, of course, to the startup. So tonight we want to discuss together with Ryan Lober, CEO of French robotics company FaziLogic, and his investors, Ivan Michel Ekirch, and also from Karista, from the deep tech early stage VC fund Karista, and also with Julian von Fischer from the Munich-based industry specialized seed stage investor 42Cap. So a little bit of history, but I'm sure that we will go a little bit more into detail. But FaziLogic has raised in September last year a 2.5 million euro seed round from Karista and 42Cap. And we want to discuss together why seeking the funding in the core target market has had a positive impact for FaziLogic, and what the investors will do to leverage their market knowledge and network to help FaziLogic scale on the European market. So without further ado, let's get started. We'll have a quick Q&A session in the end of the webinar. Please leave any comments or questions in the chat, and we'll get back to them and to the questions a little later on, if that's okay for you. So my first question is, of course, to Ryan. So we've discussed before this webinar, and it was our idea to organize all of this together. So tell us a little bit about what you do at FaziLogic, so that all of our visitors have a good idea of what you're doing, and also give us a little. And the idea was also that you're initially from the US and you founded your startup here in France. So what for you makes the European market so special and different in your eyes?
So many questions in that question. So Andrea, thank you very much. Nice to meet all of you who are here virtually. For those of you who I have not met yet, my name is Ryan. I am the CEO of FaziLogic Robotics, and we quite simply make software that make robots, industrial robots like the one I put here behind me, easier to use for flexible production. So if we're not doing mass production, like the vast majority of industry in France, Germany, and Europe, and really in a lot of places, industrial robots are really hard to use. They're very complex and costly to integrate. And we make a software, a platform actually, that makes them far simpler for non-roboticists. That's the key, is making companies autonomous with these machines so that they can use them as simply as they might use a tool, like a drill. So that's what we do. We make software, and we make it to run these hardware machines, these robots, for the various manufacturers out there. And I think that sums it up in a nutshell. And really, robotics for flexible production. That's it. And I think that what brings us here today more than anything, what brought us to 42Cap, what brought us to Karista, was we're a startup in industry, manufacturing. And that's one in and of itself very difficult to deploy new technology to manufacturing, to industry. To deploy really disruptive technology, that's even harder, but let's just say it's difficult as things go. And in Europe, maybe the particularity is that each country presents its own challenges. Deep historical ways of doing business, even though today is very globalized and the euro has simplified things dramatically, culturally speaking, there's still a lot of differences. And from the very outset, FaziLogic, we knew we would be an international company, not just in talent profiles that we would look for, but quite simply in industry, being French, German, being European is important. Because if we're labeled as a French company or a German company or a Spanish company, etc., that's our label. But if right from the get-go, we show everyone that we're invested in an international culture and an international business model, and doing so also with international investors, it's embedded in our DNA from an early stage. So that's why we sought out this strategy, which is not the easiest path to follow. Raising money is already difficult. Being a startup in industry is difficult. So this just adds another level of difficulty. But it's an investment. It's an investment in the future of the company. So I think that's what spawned our initial discussion with Andrea, and that's what we're here for today.
So thank you for this. And I think it's really interesting because you really see this international approach from the very beginning, which is not always the case for startups to have this international viewpoint from the very beginning. And of course, your own background really, I guess, helps also in seeing this on a very international level. And I think it's really a good choice. So, and I guess that also because you have this conviction, you also looked for investors from different countries to be able to leverage also their network. So I guess this is what drove you also to Karista and 42Cap. So my question is, how did you find them exactly? I mean, how did you do to find those investors? How did you do to choose the ones? I mean, did you have very many in your on your list, and then you targeted down to very few, and then you chose those two? And why were Karista and 42Cap for you the right choice?
Well, I think first off, credit where credit is due. Julian actually found us. So Julian contacted us really early in our development, and we were like, "It's great to meet you guys, but we're not ready yet." And when we were finally ready to raise money, Julian and the 42Cap guys were still there. They were watching and observing. This was a space that interested them. And with Karista, we met Karista actually through one of our advisors, Philippe Herbert, who's here, and I think he's in the audience, who helped us figure out who are the right people for us, both in Germany and in France. It was very integral in helping us identify which investors really knew the space, really knew what they were doing, and not only through network, but also the challenges that a startup will face in industry specifically, because they're different. I mean, if we're launching a B2C product, it's a completely different challenge in terms of go to market, how we're going to strategize, what's our cycle of sales. And knowing that, having that background, either as former entrepreneurs in the case of 42 Cap, or people that are deeply embedded in the deep tech system like Karista, having investors that understand that fundamental challenge for us was really important, to have people we can communicate with, because that's probably one of the most interesting difficulties in what we do is communication, whether it's with clients and prospects, or with our board, or now our investors and our board members. Just getting on the same language. We're a young startup who's reinventing the corporate wheel, and we've got people that have a lot of years of experience having done that. Having to find that same wavelength is important, and a lot of that is how well you get along with people at the end of the day. And after going through a lot of different investors, who meeting a lot of different people that were also investing in the industrial manufacturing space and robotics, etc. What really it boiled down to was who we communicated best with, who understood us at a very fundamental level, and who we could exchange with without a lot of filters. We didn't want our communication with our early stage investors to be a highly filtered engagement where we're always, trying to put on our best show. We wanted to be able to talk about our problems and get advice. That was why we wanted these investors.
Mm-hmm. So one thing that I want to highlight also, and thank you for those explanations, is that, and I know that also from all the discussions that we have had in the past, that you onboarded also very good advisors into your journey, because you were talking about Philippe, who really who's one of our close network members also of the ECA, and who knows the markets like his pockets, I would say, in France and in Germany, and also internationally. But to have people who can guide you in this journey, I think is a very important message to give to other startups.
Yeah.
And then also try to find the investors that you really, at this early stage, where you really have this relationship of trust and exchange also.
I also would be remiss if I didn't totally admit that our strategy, and myself personally, was formed enormously by Michel Baltz, who's I think also in the audience. I think he got sick recently. He didn't escape COVID this time. But Michel mentored us from a very early stage, and him being very deeply integrated into the French-German ecosystem, obviously that sort of pushed us to see the light, if you will. I don't think we would have taken the steps we did had Michel not been part of our mentorship and then formally advisory. And his background in industry in France and Germany really helped show us the importance of doing things early, because of just how difficult it is when you start to scale, when you start to deploy massively. The challenges scaled just as much with the sales. So doing it early makes that a lot less painless future.
Mm. And just maybe a hint for those who are maybe now in your situation, how did you do to find those great advisors? Where did you find them, or did they find you? Like
a little bit, I'd say a lot of luck. We through accelerator program initially, Wilco in France, an industrial accelerator, and also through Agoranov, which is an incubator.
Yes.
And quite frankly, again, it's just communicating. It's meeting people, and just people that are passionate about your project, as passionate, if not more than you are, almost in many cases, and seeking that out and saying, hey, let's work together, help us build this. And a lot of people just want to help you build things.
Yeah, it's really great to have those people in the network. Now, I want to move on to Ivan from Karista. Thanks again for joining us tonight and sharing a little bit of this story. So please, Ivan, tell us a little bit about Karista, a little bit what your investment thesis is, what kind of companies you're looking for, and then also why did you invest in FuzzyLogic? What was for you the story here in this startup, and also maybe the advantage that you see investing alongside another European investor like 42 Cap in those early stages?
A lot of questions. Thanks, Andrea. Thanks also to inviting me. Karista is a venture capital firm since the last 20 years. So we did about 100 investments so far, goods and bads. And we are dedicated into three main domains. The first one is health, covering the three dimensions of biotechs, medtechs, and digital health, all what is related to software for health, the platforms, everything which is now on the market. The second area is mainly digital, B2B softwares, and this is maybe the main reason why we were interested to look at FuzzyLogic, but not only, because the third domain we are investing in is deep tech, and by deep tech we prefer to call it engineering, where we have engineers to develop new projects, new things, new platforms, new products. Just as an example, we are investing in space industry. We just launched a fund dedicated to space industry covering Europe, but we have invested in robotics, in nanoparticles, in industrial constructions, things like that. We are a team of 14 people. We are senior management of the company. All the senior manager have another experience or past experience in different domains. And myself, I spent 11 years in the PLM industry, the industry which is developing software to manage the industry life cycles from product definition up to product support. And this is the second reason why we invested into FuzzyLogic. We had that experience at Karista, and we would like to support a company in a deep tech industry, what we call 4.0, project. And the company is meeting the challenges of large industrials right now, which is production line agility. And it is impacting not only the industry but also the robots manufacturers themselves. This is the first reason why technically we look at the project. The second reason is what the team made up, combining business knowledge and technical knowledge. Ryan is the one founder with an industrial background. They do have technical expertise. They co-founded this company software alongside some R&D labs, and they do have an experience of business development. So the first time we met together, we were discussing with a team of guys, understanding the value, the industry, the impact, and the big changes in that area. They also developed their proprietary technology, and this is coming not only from R&D, pure research work, but also from 3 years of development. So the product was advanced when we invest into the company, and they had the support from industry at the early stage. They were working with the defense industry. They are working with nuclear industry. These two types of industries are very conservative and very tough industries, where you have to provide them with a serious product and serious support. And this is also, I should say, a good value of the company. Last but not least, we also investing into people, and we find two fantastic guys and a great team. And this is also the way we are and the way we're investing into startups. So just to come back to Karista, we are investing at early stage, let's say from seed stage up to Series A. This is where we are entering company capital. And I don't remember exactly your last question, but it was about the advantage to invest with another investor, another European investors. Why
Yes.
alongside with another European investors? So because we are in Europe, and Europe is a great area to invest, and we can't do that by ourselves. So we have to invest with other investors, having another view, coming from different countries, and sharing the same view of investment. So Fuzzy Logic must be de facto European company, if not global. Its prospects and customers are themselves European companies, though they are. It's compulsory for them to have a European view.
And do you just one question in the majority of the investments that you do at Karista, are those mostly, let's say, French in an early stage? Are they all European? Did it change over the last
yes.
maybe 2-3 years, because many things changed during the pandemic? So what is the evolution that you see here?
We were mainly, I should say, from the first 15 years investing or co-investing with French VCs for the seed and Series A round. And since the last 5 years, we are mainly co-investing with European VCs. And this acceleration is coming because of the amount of money which is present now in Europe in 3 main countries, I should say: Germany, UK, and France. And this kind of money is now available globally for European startups. And this is an evidence for us to co-invest with European co-investors.
So I think that's a great transition to your co-investor, Julian. Maybe also from your perspective, and you can tell us a little bit about 42 Cap. So you're based in Munich. You also invest in seed rounds and early Series A. So give us a small information about what 42 Cap is. Maybe you have some additional points to add why Fuzzy was the right choice for you, and the collaboration also with Karista, and if you see the same kind of development as Ivan, and to see that we have more and more European investment strategies from an early stage on.
Sure. So first of all, thanks for having me. I'm with 42 Cap. We're a Munich-based early stage VC, investing in seed, late seed, up to pre-Series A rounds across Europe. We only invest in B2B software companies, so we're very focused in that regard, which means no consumer, no hardware, but within B2B software, quite agnostic in terms of verticals, industries, business models. Our background is quite entrepreneurial. Everybody has been sitting on the founding side before, built companies, scaled companies, sold companies. So I think that's also one of the main thing we bring to the table. We're not investors first, we're entrepreneurs first, and that's also what we try to bring as added value to our portfolio companies. I think we are based in Germany. We do roughly 1/3 of our investments within Germany, 2/3 outside. So we have a quite European mindset, and that's also what we usually look for in our portfolio companies. So, Europe first, we see it as one big market. It's not as easily scalable as maybe the US, or India or Asia. But in the end, Europe has gotten way more open in the past 20 years. So definitely you need to build at least the European champion, if not a global champion, if you want to get big enough in that game. Cool. So about Fuzzy, I think as Ryan said, I nagged him and chased him. I think for over a year before he let us invest in their company, and we started looking into the robotic space quite actively. It was a time when we thought, okay, what are the areas where we can get a bit out of our comfort zone, and looked at three main areas, namely biotech, space tech, and robotics, and looked at a lot of different players in the European market, trying to understand where the biggest opportunities in the software stack from a robotics perspective. When I came across Fuzzy, really liked how passionate they were about product. So for us, it's usually product first. A lot of VCs say seed stage investing, most important thing is the team. I actually believe most important is the product. Amazing products are always built by amazing teams, often not the other way around. So I think at the early stage, we are very product focused, and that's also what we really found in Antoine and Ryan. So very deep expertise, the willingness to do things differently than they have been done in the last 20 years, but also acknowledging what has already been done by other startups in the space and how you can improve that and do that better. So we really see with their approach that it hopefully will be a paradigm shift on how things are done in the industry and how they have been done in the past 50 years. And that's what we would really appreciate.
Mm-hmm. And how about the, I don't know exactly what was, you were maybe there first, and then maybe Karista came in second or something. I don't know, maybe you can give just a brief info about this, but is it for you now a very, let's say, normal process that European VCs join in for those rounds? Is it something that is now really very common at that stage? And how did you, let's say, is this something that can also, let's say, make your wish to invest in the company even stronger if they are actively seeking European investors? If you see that this European approach is there from the beginning?
I think venture capital is this weird co-opetition. Everybody's looking at the same opportunities, but still you're always collaborating, right? You're always working together. I think it's a quite close and dense network. I think sometimes even smaller than a lot of founders believe or know. So in the last, we've done roughly 40 investments. So far we have done one investment where we were the sole investor. In all the others, we invested together with other VCs, invested together with angels. And I think, everybody has his or her strengths. Everybody has his or her focus. And in the end, it's really finding a syndicate covering all the different needs. And there is not really anybody who can give 360 degrees, right? So from that perspective, we always co-invest. We're always open. It always depends on the structure of the round, on the different stage. If there's enough space for two VCs, or if it's sometimes maybe a VC and some angels. But in general, we met Karista through the process with Fuzzy, so we talked to them in parallel. Was a really good match from our side as well. So from that perspective, we're always super open. And in general, I see definitely a trend, right? I think the market definitely has shifted. I think Ivan can probably say more about that than me, but I think 20 years ago, it was, as a VC, I think it was way easier. Today, it's not only about finding the best opportunities. In the end, you also need to win them. So I definitely see a trend towards rounds where there's more than one VC, mostly two, sometimes even three of them. Which also means that VCs have to, reattach on the business model. How can you get ownership stake? How many portfolio companies can you actively handle and help, right? Just spray and pray is usually not the right approach, because you can't handle that amount of portfolio companies and actively support them. But from that perspective, we're always super happy to work with other strong VCs within Europe, outside of Europe, and I think with Karista we found a pretty good match here.
Great. Thank you, Julian. Now back to Ryan. So before starting this round, and now it has been 6 months, I think, maybe 6 or 7 months. What have been your expectations when you chose this investment strategy? So, and those two investors, so for a very from a very concrete point of view, how do they help you run your business? How active are they in advising you, especially because you have strong advisors, but also the investor can be a very strong advisor. So in regards to your also commercial development in France and Germany, how about the network that they can also share with you? So can you tell us a little bit about this?
Yeah, for sure. It kind of starts off with the follow-up of what was initially presented during the round. Okay, well, what are we going to do to kick off this big plan? We're all trying to aim for the stars. How do we land on the moon? And so it starts off pretty, let's say, a high level, and then you sort of zoom. You get back once you get off the clouds of fundraising and you get back into operations. You realize that you've got a lot of operational difficulties that you never had before. Okay, well, now I have a sales team. What do I do? Or how do I hire a sales team? Or the tech team, now there's 15 people. What do we do? We're panicking. And that's, I think, when it gets fun. And if you've got good investors, like I think we were lucky to get, the people who've been there, done that, and you can ask them the hard questions, and they're going to answer it, but they're going to ask you a question in return that'll make you think. And then you'll answer it, and they'll be like, well, that seems like a reasonably good idea. Go ahead. And really, at the end of the day, it's just execution. And so it creates, I think, one of the biggest changes is the formal institution of boards. And I think that can have either, in bad cases, that can have sort of a micromanaging effect, which would be bad. I can see how that would be horrible. But in good cases, like I think we've got, it creates this sort of sounding board that you never had before. And that's what we use it for. And, someday we might not use our board in this manner. It might become more rigid, more sort of routine. But today, the way we use it is experience. It's a sounding board for us to move forward on both operational and strategic decisions when we feel like we need feedback. And again, like any advisor or mentor or board member, they can't give you the answers. They can only point you in the right direction and say, go. And I think that's the best we can hope for, and we got it. So I'm very happy with that.
Mm-hmm. That's great. And also concerning because if I remember right, but please tell me again, before the fundraising, I'm not sure if you have already been active in the German market, but how does it, when you come from, let's say you came sort of from France or European, but still based in France, and then the German market also, of course, is a big target market for you. So does this, in terms of visibility and network and access to the market, has this been helpful for you? Or do you think it will be helpful because it's only been 6 months?
A little bit of both. It has been, there's some very tangible benefits. Obviously, most investors, and the good ones, are pretty well connected in pretty much every industry. And so that did lead to some very immediate contacts, which we're very happy about. But I think the benefits are more intangible than that. I think they are this meeting we're having today, the ability to talk at a European level and not be, the expression in English is pigeonholed, specialized in just French industry. Industry is European, it's global. We have to immediately get it into people's minds that, okay, you're a company that operates in every country in Europe, will be able to service you. Maybe not tomorrow, but the day after, we can service you. And that's already happening now with some of our earliest clients. Framatome, a nuclear industry company, they provide nuclear services and equipment. they're everywhere in Europe, including Germany. And success in France has led us to Germany, it's leading us to the United States. It's taking through your biggest customers, the happiest ones. It takes you to places whether or not you're ready. And so a part of that is investing early before you see those real tangible benefits. And when we went to Germany, we said, oh, our investment team is half German. Oh, where are they from? It's an icebreaker to confidence, which is just opening the door for you to get through. But you still have to do all the work. So again, it's an investment. Like all things you do at this stage in a startup, little effects now can really have a big impact later down the road. And sometimes it's hard to see that. Sometimes you forget it. But you have to remember it. Otherwise, you don't invest in anything when you should, which is 2 years before you're trying to do it. I think we might have lost Andrea. Oh, no.
Andrea?
No, I'm here. Yes. I'm sorry, I'm here. I had a small connection issue. So, but I heard what you said, and thank you very much for this. I think the trust element actually is something that is really important, and I think it just gave me an idea that we have to make another session on this kind of issue or question. You know, how to be able to serve on a European level, you know, as quickly as possible. Could be another session. But I wanted to come back to Ivan, and I wanted to ask you. What would be for you for a startup that is you know, thinking about raising funds very early with European investors like Fazilogic did? What would be like the main advice that you would like to give this startup? How should they, you know, start their journey, go about it? Is it, you know, finding the right advisors? How can you find the right VC? How should they do that? Can you give them your feedback?
Yes, okay. Maybe also Julian can add some inputs there. The first thing that I can see is to be able to involve the investors with similar skills and view. This is very important for companies to have early stage investors that can discuss together, share together, express themselves, discuss together on different cases. Because, you know, with young companies, a week is good, another week is bad. So we have to speak a lot on very often. And this is to create a good working dynamics from the start, which is very important. The second thing I should say is for the company or the startups is to show an understanding of the market, which is explicit. That is to say, a go-to-market that you can explain, even if you are not starting whole Europe, but just from one country, for example. And an appropriate business plan. Often the business plan are maybe too small or too excessive or in excess, or you have to have an appropriate business plan to start a company. And maybe as Ryan said, you have to make an appropriate use of your investors and their network, especially to prepare the next round, because a round is just a round, and you have to prepare the next round of financing with always this dynamic of expansion. So you have to spend time to structure the company, to structure the people, and to have your board members with you in order to prepare the future.
Mm-hmm. Julian, maybe if you want to add some points to this.
Sure. No, I mean,
I
mainly agree with Ivan. If in regards to fundraising at early stage, if I would boil it down to 3 things, is first one, I would see every hour spent with investors is an hour not spent on the product, right? I think there is a lot of glitz and glam. You see all the news, huge rounds raised. I think it's sometimes it feels like that's what makes some founders go forward, speaking to VCs. So I would say don't give in to the buzz, right? VCs are like salespeople. Just because an email lands in the inbox and I'm very happy that Ryan did reply, but it is a VC's job to find companies and to talk to them, right? But bring the investors on your timeline, go into fundraising whenever you are ready, and, you know, build a relationship, but mainly build a product. And once you believe you're ready to raise a round, try to parallelize as much as you can, build deal momentum, raise your round, and then again, focus on building the product. I think that's the first thing. Second one is find the right partner for the right stage. Europe got pretty small. Also, COVID has shown that you can make deals via Zoom. We only met Ryan and Antoine a couple of months after we wired the money. So we're quite happy that they actually existed. And it was not only a bank account in France and maybe two guys on an island having a good time. So, you know, find the right VCs, which means specialized funds, you know, build together your dream team. As I said earlier, what's the geo focus? Maybe have a local partner if you think that helps you. On the other hand, you know, Karista is a great partner since they understand deep tech. I don't believe any startup needs a local VC just to advise them on who's a good tax advisor, right? I think in the end, go for specialization, go for geo focus. Multi-stage funds sometimes can be a right fit. But in the end, you know, for a seed round, choose a seed fund. For a Series A round, choose a Series A fund. And mostly on that point, gut feeling is super important, right? In the end, you need to work with these people 10 years. And you also need to work them when maybe sometimes shit is hitting the fan. So, you know, really go with the people you have a good feeling with. You also think you can go on the whole journey with, and even when things are not going well, right? And the last point I wanna bring out, which is something I often wish for, is founders should understand how a venture capital fund works. And I think it's very, very important for a successful fundraise to also understand what drives the other side, right? Why do VCs do things the way they do? Why are certain things pushed? So one of the things, like, don't take a no personal. We are a small fund. We're 5 people per year. We look at roughly 3,000 companies, and we make 6 to 7 investments, which also means we say no a lot of times. In the end, a VC's job is you ask questions, you try to find a no, and if you don't find a reason to say no, then you invest. So that means that a lot of time you just have to decline startups because something small didn't fit. So don't take it personal. But again, you know, understand how VC works, what ownership targets are, you know, what is the investment sum they can invest in, look in their portfolio, what kind of topics are already covered, what might be interests, and read. I think in 2022, there is no excuse. All information is available. There is great podcasts. There's great blog posts. You can find everything online. It's just a matter of time. So in the end, you know, you can get a lot of things front loaded and really be strategic about your fundraise.
I have one additional question, because we have often discussed it also with, you know, also seed stage accelerators and all of this, talking about the international viewpoint of the startup. So what are your and Ivan, you already mentioned it a little bit, but what are your expectations for startups about the knowledge they have on their next geographical target markets? Because it's not always the case in seed stage or early Series A that you already look at international markets. So what is your expectations? What should they know? How should they be prepared? We always try to tell them, you know, have an open ear of what is going on internationally, be aware, go to a couple of events, just have some strategy, because many of them only start thinking about Europe once the Series A funding has hit the bank account, and then they say, okay, now what do we do? So how do you advise them to prepare? And maybe then also, Ryan, you can tell us how you did that, but what from a VC point of view are your expectations? How deep must it go?
Yes, it's very depending the round you are talking about. Is it a seed round or is it a Series A round? It's very different. So I would maybe to answer at a Series A round, you have to know your competition perfectly. That is to say, your direct and indirect competition in the different area, not only countries, but area. Your competition in Europe, in Asia, in the US, wherever they are, but you have to know your competition. You have to know the amount of money they have already raised. You have to know the people who are managing this kind of company. And you may have had some call with prospects in those countries, not to have a contract in the next 2 weeks or 3 weeks, but just to talk with them about the area, why they choose that kind of product, what is the idea of development, why they do need the kind of solution you are providing on the market. So this work has to be done. What we call the go-to-market is essential for young companies. If you don't know the go-to-market, if you can't explain clearly what is your go-to-market, you have no chance to succeed.
I think it's highly dependent on the type of company, right? There's software companies, developer tools, which can sell globally from day one with a self-onboarding. Fuzzy, for example, is a completely different motion, right? It's enterprise sales. You really have to land with a use case. In the end, founding a startup is managing risks. And I think for a seed stage, you still have a huge product risk, right? Is there a product market fit? Do you find customers? And then it doesn't really matter if your first customer sits in France or in Germany, whatever is the easiest for you in the beginning. And that usually is the home market because you know it well, you have the network, go for that. And then for the next stage, you have the market risk, right? Can you scale this from your home market, from your home turf to a different country? So I think it's usually startups at seed stage underinvest heavily in sales. So I think in the end, right, you need to build an outstanding product, but once you have it, you shouldn't take too long to also scale your sales machine. Think about how you want to go with your go-to-market, have a clear vision, which countries, how do you want to go about that? But as Ivan said, it's stage dependent, but obviously you should have some kind of plan in mind where you want to go and know where your customers sit.
Mm-hmm. Maybe Ryan, because you have already been there, so you can talk about your own experience. So what
in the middle of it.
In the middle of it, yes. But you always you're already past this first investment stage and now scaling. So what are a little bit? So how did you maybe prepare for those kind of questions? How did you get your information? Did you already have your go-to-market, your competition, everything mapped out before meeting with investors or not at the age of your company? And then maybe a little bit, what would be your do's and don'ts for companies that are maybe behind the first seed round or looking for raising some early Series A?
So I think to start with, in terms of what we did to prepare, what I did in particular, understanding your competition, I agree with that entirely. You will whether or not it's real competition, actually, because you dig down, if you're really doing something worthwhile, I think, then you're kind of operating on your own, but you're always compared. Whether or not it's a direct competition or not, you will be compared to existing solutions. So you need to understand what you're being compared to and who's out there. Because if you don't have a coherent response, especially in industry, you'll just get laughed out. And the same goes for your investors who are investing in industry. They know this, they're looking for that. And so I think that it starts with really understanding where you sit with respect to everyone. And that probably takes the longest, because when you understand where you sit with respect to everyone, it makes life a lot easier. It really does, for internally and externally. So that would be my biggest piece of advice. I don't think startups spend enough time looking at their competitive environment. And we really invested a lot of time and effort into it. And I think we just scratched the surface of what we could truly create in terms of competitive analysis. And sort of to feed on what Julian said, at the end of the day, you just have to have people that love your product. And whether or not your product is fully in place or not doesn't matter. If what you're selling, the value you're selling, is getting to the client and they're happy with it and it's solving some big problem, then you have something. You might totally rebuild the product between seed and Series A, and that's fine, because at the end of the day, what you're doing is delivering value. And I think that's our primary challenge in this stage of development, is just proving this fact on a bigger scale. So we proved it on a very small seed pre-seed scale. Now we have to prove it on a slightly larger scale through concrete applications with big names and deploying and going further. But I think that the international thing, what we're in the middle of today is, if you follow this route, which is not the only route, I'm sure there's a million other ways to do go-to-market depending on your specific sector of activity. We're getting pulled to markets. We pushed to move towards certain sectors of activity, but in the end, when you start showing people what you can do and that you're 10, 100 times better than the nearest best solution, you get pulled, and that's a good thing. But you have to be ready for that. And like now, a concrete example: I need to hire a German application engineer, and it's going to take me 6 months to do that. And the people I'm working with in a German factory don't speak English. Germans have a very good level of English, as do a lot of French people, but when you go to many parts of these countries, no one speaks English. So if you don't speak some sort of common denomination language, it's a very simple and stupid problem, but it's a big problem. That'll prevent you from doing customer support, from doing your sale, from closing your deal. And if you're stuck in this situation, you're Google translating emails, you're not going to get very far. And so that's why a little bit of prep work, you might not be deploying your go-to-market in Germany just yet, but you might need a German support guy on your team so that you can at least service your first couple of customers. Because if you don't make them happy, then you won't get much further. So that's kind of maybe a response to all the questions. I don't know if I left something out there, but
to double down on that, I think when one of the main reasons in the end, which also brought us to investing in Ryan and Antoine, is that they had their go-to-market concept figured out very, very well at an early stage, and really had a great understanding on what does the market look like, what part do they want to do directly, what's the timeline on that. And we're still taking the risk that they will be able to execute on that, but at least they have a plan, right? The other thing which convinced us was customer references, right? If you don't have 100 customers, then the few customers you talk to and try to understand how passionate are they about the product really makes a big difference. And I must say, I wasn't quite sure if I was talking to a sales guy from Fuzzy, because the testimonials I got were outstanding, and really from people which also understood the market, right? Who tested other solutions out there. And if then a big enterprise customer, somebody with large industry experience, who's also seen the other tools, vouchers for an early stage company like this, that's what you want to see in the early stage.
Maybe because we're coming to the end of our session, I want to pick up the two questions that have been asked in the chat. One from Luisa, and it's directed to Ivan and Julian. So she asks, since you co-invest in startups, how do you allocate your contribution, your support in terms of skills and areas of expertise? So is there any répartition, like we say in French, or how do you handle that?
The question is very large. In fact, at Karista, we have a double role. The role is to raise funds, and it takes a lot of time to raise funds. Let's say every 3 to 5 years, and we allocate, as the managing partner, are allocating a lot of times on that. And the rest of the time, we are allocating it mainly to the founders. And it depends, as I said, it depends the day or the week. And we are participating to boards. We are preparing boards. We often have discussion directly with the founders on different topics, marketing, sales, growth of the company, development, next round, financing, closing a company. And we have a lot of discussion also with our co-investors. What we want to do, if we reinvest, how much money, in what timing, and which timing, sorry. I should say we all have a network. We can have a network of customers, of industrials, of experts. So our main skill at VC, if there is any, is the experience of having investing into many kind of companies, different kind of entrepreneurs, and having done the complete story and journey from the first investment up to the sale of the company or an IPO. And this is a very valuable experience for founders to have done 60, 80, 90, 100 deals and having had different stories and different experience from that.
I think mainly getting to the part on how we split roles when co-investing, whatever the founder wants it to be, right? In the end, value add is only value add when the founders also perceive it as value add. And wherever we have our main expertise, we're happy to help, but we don't push ourselves in the foreground. So if there is a certain part about go-to-market, maybe in respect to Germany, if there is a certain part on the tech side where we can be of help, that's fine. But I think once you invested as a fund, you're also sitting in the same boat with the founders and with your co-investors. And in terms of, I think, a split of skills, areas of expertise, there is no us versus them, right? Whoever is the most likely to be of help can help, but also we're not pushing anything in terms of contribution. Not sure if this question is also about support or contribution in terms of money, resources. Depends on every single situation. And again, the founder can steer that, right? In the end, the founder can moderate and bring more people to the round. How do you want it to be structured, and how can you build up a syndicate? And I think a lot of founders should also drive that conversation and build up their dream syndicate in how they think it should work best.
Mm-hmm. So that's a very good transition to the question of Jean-Louis about the board members that you have, Ryan. So you already said in the beginning that you have strong advisors like Michel and Philippe and others that are with you on the journey. But can you tell us a little bit about the structure of your board? Do you have independent board advisors, for example, or how did you structure this, let's say, steering group for you?
As simply as possible. Let's see, without going into great depth, Julian and Yvonne are both on our board, obviously. Want it to be as light as possible. A board, despite the fact that you can have a board that's really great, that you can call out to when you need different advice or information, the board itself structures the company a great deal more than it was before, I can tell you that. So the lighter it is, I think the better for a smaller company. And I'm pretty sure people that have been in very large companies would have loved for their boards to be a lot lighter as well. It seems the feedback I get sometimes. But it should be light because we have to move very quickly. And if we have a lot of procedure at the strategic level, at this very high level where there's a lot of uncertainty, it would be crippling, I would say, would be the best word for it. And I think it's better for everybody because there's a little bit of, okay, go just execute startup as investors. The worst thing I think we can do is spend our time proceduralizing board meetings and reports and making everything look pretty when in reality it's a nightmare. So the lighter the board is, the better. It has having that ritual, that rhythm of quarterly board meetings or even less frequently is good. I think it helps the startup get ready for the next stage of structuring of organization, but it really should be a stepping stone towards more formal, stringent board requirements. So yeah, because it baby steps, huh? There's enough stuff to do in a startup. You don't need a million other things to do to make your board happy. So if it can be light, that's good. A little bit of structure, it's fantastic.
Okay, that's great. And so as we already talked about him, I'm sending a small twinkle in my eye to Philippe, because he always tells us to end our meetings and webinars on time. So as it's now 6 o'clock exactly, I would like to thank you, the three of you, for being here and answering our questions. And I want to remind everyone that you can become a member of the ECA and also of the Club Économique Franco-Allemand, of course, by joining through our websites. And you can also follow us on LinkedIn and subscribe to our newsletter. And there are very many things that you can do. And so thank you very much, everyone, for listening today. There will be also a replay available if you want to. You can share it. We will share it on our LinkedIn site. So do not hesitate to comment and to share. And if you have any questions, please come back to us or to Ryan, to Julian, to Ivan, and just connect and keep up the European spirit. So thank you, everyone. And I hope to speak to you soon.
Thank you, Andrea.
Thanks for having us.
Thank you.
Thank you.
Bye-bye.
Bye.
Bye.
Bye.